All right, so hello everybody who's joining us today. I'm Kate Voyles. I'm the Director of Business Development here at US Physical Therapy. And I have with me today two of my favorite partners at USPh, and those are Chris Redding, our CEO, and then Rick Binstein, our General Counsel. So we're here today. We've seen and heard a lot of activity in the space, and this is a really interesting time. And we have some specific questions that seem to consistently get posed to us. So we wanted to take some time and chat as you would normally. What you see here is how we normally connect during these times. We wanted to share in this space some of the most commonly asked and requested information of us, and also just share kind of where we are in the world right now and in our industry at this time. So to kick it off, Chris, could you go ahead and share a little bit more about yourself, just in case anyone is not familiar with you or haven't met you yet?
Yeah, sure, Kate. Again, my name's Chris Redding. I'm President and CEO here at US Physical Therapy. I'm heading into my 18th year this year. I get to work with a wonderful group of folks. My background was I had a long career in sports medicine. I'm a therapist. Practiced for 18 years in Virginia before moving to Texas in 2003. I have a beautiful wife and 5 kids. And again, I love the people I work with, and I love the company, and I look forward to talking about it.
Thanks. And Rick, can you share a little bit more with us as well?
Sure. Hi, Rick Binstein, and I'm General Counsel at US Physical Therapy. Been here with USPh for 11 years now, and have been in this outpatient physical therapy space for 24 years, working with many of the other large national companies in our space. And so in my role, I work with Chris and the team on development. That's a big part of what I do. It's an exciting part of how we grow, and that's me.
That's great. And I'll share, just if anyone is joining us today and is not familiar with me or haven't met me, I've been with the company now going on 14 years. It has always been on the new partnership side of our business. So my excitement is always around meeting new people and really looking for and feeling that connection that we really are committed to finding in the ideal partnership scenario. So I have a lot of fun, and I get to work with both Rick and Chris consistently on all deals. So it's great to connect with everybody today, and we can dive into some of these questions, because I know that folks are probably interested in getting some information from us and learning a little bit more about where we are. So to start with, this I think is the million-dollar question is, currently we're in February of 2021. And so kind of what is the state of union for US Physical Therapy on the strategic partnership side of things? Where are we kind of overall in the industry? What are our thoughts here? And then where's our company as a whole as well at this point?
Yeah, that's a great question, Kate. So, as everybody knows, while we had hoped to be out of the pandemic at this point, we're still stuck in the middle. But the company, our company, we've made so much progress as we've come through this, and I say through it, we're not done yet, but we're in great shape. I mean, we literally in the last few weeks, we just redid our banking relationship with Bank of America. We updated that. We expanded our credit facility. It's even better than it was before, and it was great before. We're down to the point where we functionally have effectively no net debt. We've paid down our credit facility almost completely. We've got plenty of dry powder, and business is actually pretty good. We're off just a very little bit compared to where we were pre-pandemic. We got back to within, I think, 0.3 of a visit per clinic per day in November and December. We're off a little bit to start the year, but we've been picking back up. And so we're looking forward to, a great year and actually a really good development year.
That's exciting. And it's probably not the case for everybody out there. And I think we understand that. We're probably extra sensitive to that too. So, all right. And then as far as, with our overall strategic partnership activity, you had mentioned that there's activity that has, we've had transactions that have closed thus far and in the recent past, and then we've got some activity potentially moving forward. So can we talk a little bit more collectively about what we've got going on in our space activity-wise and kind of how we view this year potentially as well?
I mean, it's going to be a great year. We're as busy right now. I mean, we've got Rick, doing documents on deals. We've got new inbound activity. We've got things, as you mentioned, that we put on hold pre-pandemic that we're now, several of which, we've closed, and I think we have one more yet to close. But it's been busy, and I think it'll continue to be busy, and it's a good time. And for anybody who thinks that now's maybe a bad time because last year wasn't a perfect year, I would tell you that it doesn't have to be. We approach this, we try to be fair in every deal and look at this the way that we would want somebody to look at us. And so we've carved out, those months like April and May and the valuation. We've tried just to make sure that the business is back to where it was, pre-pandemic or close to. Just tried to understand it. But the overreaching theme is we've tried to be fair with people. And as a result, we're getting a lot done.
Yeah, I would just add to that pre-COVID, so prior to, February, March of last year, we were in the mix with 3 different groups, great prospective partners. We got to know them. And then COVID hit, and, not surprisingly, like most folks, we had to kind of fight our way through that. And what's great is, as Chris alluded to at the beginning, just the nature of our company and our capital structure, we're back again, rock solid. So we've been able to get back with those prospective partners and complete those deals. So 2 of them we completed. Third one we will complete. We're in the middle of. And so, yeah, I mean, it's as Chris said, for us and our continued growth. I mean, it's back to as much as back to normal as it can be. I mean, we're solid from a capital structure and dry powder, and still meeting with great prospective partners. So we're going to continue to get a lot done.
Well, and you just made me, I'm going to jump a little bit ahead to a question that I hear a lot, and I know that you guys do too. And you had mentioned it, Chris, and that's some of the ways that we're looking at appropriate methodology in this very unique time, and how it looks and feels on a case-by-case, deal-by-deal basis. And so you mentioned a little bit there, how that seemed like it was kind of a no-brainer for us, and it was fair and appropriate. Can you share a little bit more about why we're taking that approach? And we've heard a lot of different things about ways that others might be approaching pricing these days. How are we looking at it, and how are we applying the fairness that's so true to our core?
Yeah, I think you said it earlier. I mean, this isn't a one-size-fits-all approach, and we're frankly not a one-size-fits-all company. And what I mean by that is we try to look at every deal separately. We don't have just a narrow, tight box that we have to fit into. We make our choices, we make our decisions, according to what seems like the right reflection of where the business is at the time that we're completing the transaction. And so that may mean different things to different people. We obviously look at EBITDA. We look typically at trailing 12 months EBITDA, but this hasn't been a typical period. And so we've had to be a little bit more creative. And as I've said, it's taken different forms. But, the net result is we try to get a fair and accurate reflection of the business as it will be when we partner with that business. And so we've been able to carve out highly affected months, we've been able to look at, prior periods that might, historically have not come into question. And then, obviously we look at where the business is currently and how they've functioned and what they've done through this most difficult time. So yeah, I think there's a good opportunity for people. I don't think they have to wait in order to get a good, fair deal. I think there's opportunity right now. And I would tell you, for those companies that want to grow and see other opportunities, because there are companies out there who aren't, doing as well and who might want to fold in tuck-ins, which Rick can talk about. We help our partners do. Now's a good time to get a deal done, because there are other opportunities for expansion that we see in the near term that we can help with, and we can help your company grow with.
And on the pricing and the fairness point, I mean, one thing as I think about it, our model is different than the model that acquires the company, right? In that model, the buyer is trying to get the best price possible to buy the company. With us, of course, we want the price to be attractive from a fairness standpoint, but also for our partner. I mean, for us, these transactions necessarily result in the person who's getting that purchase price is going to be part of our family. We're going to be working with that person forever, and I use that term. There's no, until that person retires. So, and we're relying on that person who's going to have a significant ownership stake, remaining ownership stake in the business, to run the business and carry on effectively like they had. So all I'm saying is there's an additional reason why it's only going to work if that new partner of ours feels good about the valuation they got from us and the fairness of the transaction. Because again, it's not one and done. It's we're kind of getting into a marriage with that partner or group of partners that we're fully expecting, and we can see how it actually does happen this way, is going to continue on for quite some time. So, any relationship like that, it's important that everyone feels good about what they just did. So again, another sort of side reason why it's in our best interest for our new partner to feel good about the price they get from us in that initial transaction.
That's a really good point. And you just made me think of some conversations that I've had where methodologies and the way that a potential buyer has approached an opportunity, the details have not been particularly transparent to the potential seller or the potential partner. And so how do we kind of broach, I'd just like to share with folks, how do we broach those conversations and ensure that they can feel positive about the valuation? I'd like to share a little bit more with our viewers just about how we are pretty open with that process and how they are aware of where we're looking at things and the methodologies that we applied.
Yeah, when we talk to people, Kate, as you know, our goal is to come to an agreement. Effectively, is what it amounts to, an agreement on, what the EBITDA is in the company, and then what the value should be at the time of the transaction. And so we share with them the calculations. They provide us with a lot of information and data. Add backs, salary adjustments, whatever might be in or out of the business. And then we try to come up with, again, not our number and not somebody else's number, but the number. And we share that with them. We share it all. And then obviously, Rick, as we put together our expression of interest, which is, kind of what we call our letter of intent, Rick goes into great detail so that there aren't any surprises. And Rick, you can talk a little bit about how and why we do that. But I think it's the most transparent way for everybody up front to know what they can expect.
Yeah, no, absolutely. And so to that point, when we're sitting down with a new partner and we come to, we both work together to come up with the recurring EBITDA, as Chris said, the profits that we would expect going forward, and then that reaches evaluation. I mean, our goal is transparency. So we take the time in this initial stage to, outline on several pages really all of the key business terms in the transaction. Because for us, again, we go through this process. If we come to terms on the valuation and it all makes sense, those deals get done. And so the last thing we want is, as we're going through that process of putting together the legal documents and everything, for there to be something that's important to our new partner that the new partner didn't understand. Even something that, we didn't come up. So we make sure all of the key aspects of the transaction are outlined, because there's going to be work that happens for both sides to get to the end line. I mean, the due diligence process, there are things that seller, I'm going to call it seller, but our new partners organization has to do. And, we want them to spend that time knowing that our transaction is going to occur. So transparency, a prospective partner will feel good about, hey, I really understand how this is going to work, and I understand all the key terms, so now let's go. It's a lot more than just the price for that initial interest.
Well, and Rick, I'm going to pay you some much deserved kudos, and Chris as well, but this is a piece that you both are always ready to jump on the phone or on a virtual chat to walk through. I mean, as often and as frequently as possible to ensure that someone is comfortable with it. So this is a very commonplace activity for us, is just to jump in with conversations on a potential partner, make sure that they understand all documentation that we've potentially provided, our valuation, and we're willing to have those discussions to ensure that the transparency is there.
Yeah, and just on that, I mean, the thing is, the folks who are involved in this process, myself, Kate, Chris, our COO, Graham, or Glenn, those are the people who are involved interacting with the prospective new partner are the people who care a whole lot about this company. There's not an outside lawyer, there's not an outside broker, not an outside development arm, and folks listening to this, may have had to interact with a lawyer or a broker or someone. And those folks, do their best, but, I don't care what anyone says, they don't have the same degree of longevity, involvement, and caring's probably too strong of a word, but for us, these folks who we're dealing with, if it works out, they're going to be our partner. We're going to be working with them well into the future. And it just allows for the process to be a little more efficient, because, myself or Chris or Kate, we don't have to go ask someone else, hey, what's the answer to this question? There's no gamesmanship. So I think as a result, it's sort of what you see is what you get, and it's an efficient process, and one where by the time, well before we get to closing, we know the partner well. They know us well, and I think that helps too. That helps with sort of the comfort, the human side of it, the comfort level of, because it's a big thing for a practice owner taking this step, and so. I just think the way we're structured and how we go about this facilitates it greatly for the practice owner.
And Kate, I would add this, a lot of people, they don't know if they're ready or not. And part of maybe not knowing is not really fully understanding how somebody's going to look at their business. We talk to people all the time who aren't sure if they're ready. And we're very willing to spend time not to convince them that they should be ready, because it's not my decision. It's not your decision. It's not Rick's decision. It's their decision when they're ready. Our job is to help them understand what it would feel like, what it would look like, who we are as people, what kind of support they're going to get afterwards, and then, to help them make an informed decision. And maybe now isn't the right time. Maybe later's the right time. Maybe it's never the right time. But we're willing to invest time in on the front with people without a preconceived notion that there's going to be a fit. Because, let's face it, it has to work for both parties or it doesn't happen. And so our goal is not to convince people, it's just to help people understand.
And that is spot on. And it leads me into this next piece, and that is, we've mentioned a couple of the components that, we look for, but I don't know if we've necessarily covered the full gamut of what an ideal partner would look like for us, and hopefully what they're looking for on the flip side as well. So for any viewers who are joining us today that are not super familiar with our focus or familiar at all, can we share a little bit more about, who's a real match out there in the country, and who we'd love to be able to connect with?
Yeah, I think first and foremost, we start with the people. As Rick said, we really like to get to know folks. We want high integrity people who believe in the business, who love what they do, who love their staff, who want to grow in their community. I think a forward plan for growth is always helpful. Again, in the caring for people part, it might sound trite, it might sound made up, but we've walked so many deals in the past. Fortunately, it doesn't happen that often, but where people might say, if somebody makes a good living who works for me, you can cut their salary, they probably would expect it. And we just don't do things like that. We want everybody in the organization to be excited about this when it happens, and for it to truly be good for them. And so, those are the kind of people we look for. We obviously look for growth opportunities. Your business doesn't have to be perfect. In fact, we're expecting that we're going to be able to add some things, some resources and some bandwidth so that you can do what you want to be able to do. And just know that we're not coming with a preconceived plan for you. There's not a prescriptive amount that you have to grow or that we expect you're going to grow. We just want to hear what your plan is if you had fairly unlimited resources at your disposal. And so those are the kind of things that get us fired up. Rick, what would you say?
Yeah, I would say, and again, I think most folks understand our model, but our model is a big part of my answer. And again, our model is we bring on people, we bring on partners who've grown a business. So, that partner or group of partners will continue to own a significant ownership stake in the go forward business, will be a significant owner. And so for us, I think the ideal partner is someone or group who's grown a business, built a great reputation, name brand in their local market, who is looking to continue that. Because in our model, they continue that. We rely on that group to run the business locally. We operate under the local name. And as Chris said, we come to the table and help support that group in a whole variety of functions, but help that group grow. And so that's our ideal partner, someone who's built something that they want to continue, for personal, financial reasons. It oftentimes makes sense at a certain point to take some chips off the table. So in our transaction, they are able to monetize, and get paid and put in the bank fair value for a portion of their business, but then they still have the rest of the business. And there'll be a down the road event when they retire where we'll buy that from them at a fair price, which is all pre-established. And they get the benefit of all of that growth. So that's our ideal partner. And again, on the growth side, we have a team that works with that partner group to develop new clinics, we call it tuck-in, to maybe acquire a practice, one or two clinics that's out there operating, and it makes sense for that smaller practice owner to become a part of something bigger. And through the partnership that we have, we work with our partner to expand. And so yeah, I mean, at the end of the day, we're looking for good people, because our plan and what happens in reality is we're together for a long time. This is not short term by definition for our company.
Are there any other pieces of the business that our partners have shared with us that they've really been able to take advantage of in the past year?
Yeah, well, this past year has been like no other. And sure, I think we've definitely gotten through this the way that we have, as well as we have together. And so that's combined resources of all the things that we do. But, you know, one of the things that stands out is our clinical services team, and just staying on top of infection control and CDC guidelines and continuous updates in terms of how to keep people safe, our own people and our patients, those who we care for. They've just done a phenomenal job. And it's been our hotline, which, you know, literally practically goes 24 hours a day, where if people have exposure issues or questions related to a possible exposure, our folks are right there with them, making sure that they and their families are comfortable and that we're doing the right thing. So that's been huge. You know, then all the little things add up, right? And so the partnership that we did 3 or 4 years ago that might have gotten, you know, a meaningful bump in their net rate, that helps them get through a really tough time, which means they don't have to, you know, they don't have to part with key staff maybe to get through that tough time, or they can bring key staff back quicker. You know, there are just so many attributes that go along with having the underpinnings of a really strong company. Because of the fact that we're not levered, and Rick talks about this a lot, you know, we make those decisions. We don't have the bank making decisions for us. We don't have outside, you know, business people who make those decisions. We get to make those decisions, and we have a long history of being able to do that with relative success, I think we can say. And so that enables us to do the right thing at the right point in time for the right reasons. And I do think our partners appreciate that.
Yeah, and that's a big point, and especially relevant given this past year. As Chris said, you know, and back to our structure, our partnerships are separate partnerships. So how that partnership and those partners do financially is based 100% on that partnership. So a partnership in Virginia, it doesn't matter how a partnership of ours in the Pacific Northwest is doing, for example. It's based on its own, what it's developed, that partner that we're now a part of, and we're growing together. So, you know, when you go through things that affect different parts of the country maybe differently, in this case with COVID, you know, everyone was affected, but again, different parts of the country a little differently. Decisions on staffing, on folks, on how we do certain things, those were, you know, those are all based on how that partnership is doing and how that partnership might need to adjust, which is different than a lot of the other companies in our space where, you know, not to pick on private equity, but a lot of private equity owned and have a lot of debt and you know, sort of macro decisions that impact the whole portfolio occur based on how the whole thing is doing. So again, we could spend a lot of time, and maybe this isn't the right forum for it, but the takeaway on this point, really, I just want to stress, is it gets back to our model again, that we and our partner together will own something which will grow together, and how other partners are doing and other partnerships or geographies and markets are doing really doesn't impact that a whole lot. Which again, for the partner who comes to us and cares about and wants to continue to grow and build, I think that's a positive. It's kind of within their control. That the success in that building and growth will be based on what they want to do and how they manage their business, again, with our support.
Those are great points, absolutely, and especially emphasized and noticeable in this past year. So just with those regional or geographic nuances, that really does change things from a partner's perspective. It's not a one-size-fits-all approach we're taking. So, okay, and I have to ask, you know, Chris, you alluded, you know, that not everybody's timing is right now. And not everybody's timing is ever to look at a potential partnership or sale. So this is in this unique climate that we've got. You know, what would you be considering if you had not yet reached out to any potential interested party? What might you be taking into consideration? What might make you say, you know, I should probably hold off just a little bit? What would be the thoughts around that if you know, viewers are interested in hearing more on it?
You mean if I was the seller, what might drive me? You know, again, I think every situation's different, you know, and I think the equalizer is people should be fully informed. I mean, there's so many. I know that you guys out there, you get barraged every day by people calling you saying, before you've even spoken a word, they call or they send a letter and they say, I'd like to buy your business. And we just don't take that approach. We want to get to know you. We want you to get to know us. And that doesn't have to take months and years, but you get a good sense from talking to us pretty quickly. And I think we've done this enough. When we talk to you, we get a pretty good sense of, you know, where you come from, and you'll definitely get a good sense of where we're coming from. And then I would say, you know, all your facts and circumstances, both in your personal life and your business, roll together, but you have to really understand what it's going to mean to you, how it's going to change, if at all, or what areas, how it's going to help you, you know, realize your hopes and dreams and your plan for the business. And I would just encourage you, if you get inbound, you know, offers or requests, and it makes you wonder, should I do this? Should I talk to somebody? Go ahead and talk to them, and then pick up the phone and call us, and we'll be happy to share with you, you know, how we approach the world. You'll get a good sense for how we do things and who we are, and then you can weigh the pluses and minuses and make a good decision. Because we're really not approaching it from a perspective before we've even met that we, you know, we're the right people to buy your business right now. I mean, frankly, how do we know? We couldn't know that. And that's just, again, back to what Rick says and what I talk about. That's just one more way that we're truly different than a lot of the other guys out there currently.
Yeah, and I'd also just add to that we're able to be flexible. We're not cookie cutter. So, you know, sitting here in February of 21, if I'm a practice owner and I'm looking back at the past 12 months or so, and I know, just given in my situation, in my geography with COVID, how it might have impacted my business for a month or two significantly. I mean, heck, we know of some companies that shut down clinics for a month or two, or whatever. I mean, the point is, as a practice owner, that might lead to reluctance to, hey, you know, I should probably wait another year before I even think about this. And the point is, we're open to having those conversations, to looking at the business together, to modeling it, you know, in a way that we both agree this is what the business should continue to do going forward. And again, I'm like a broken record. I keep going back to our structure, but in our structure, in our model, once we do the deal, our partner who's going to have a significant ownership piece is going to get monthly distributions of profits. So coming up with the value of the recurring value of the business, the profits that the business is going to keep kicking off, again, for us, it's important to be transparent, and for us and this prospective partner to understand kind of the true value and go forward profit of this business, because they're going to see every month what the profit is and what's the size of the check that we're wiring to their account for their portion of the profits. So again, the point is, even now, coming out of the pandemic, to the extent we're inching all of us our way out of it, that doesn't need to be a roadblock to continuing, and working with groups like us to understand your business and see if it starts to make sense, or it's at least something to further think about what might make sense.
Oh, that's perfect. That's perfect. And so I think the point that we're certainly trying to drive home is that as an owner, if I'm sitting here and I know that I've got PPP loans and I've had some really new events happen over the past year that have impacted the business, and I might be holding on and giving me a little apprehension about that. This is stuff that we are very familiar with and very versed with at this point in time. So we will be walking through any potential interested party to ensure that we're clear on their experience in the past 12 months, and ensuring that we're applying the appropriate methodologies based upon the individual situation. So
yeah, and again, said another way, we're not looking to take advantage of the situation, because again, this is our partner. This is so 100%. We would fairly look through all of those sort of isolated one-time anomalies.
Events, yes, absolutely. Okay. So as far as I think we can start to tie up, unless you guys have any final questions, but I did want to talk a little bit about the best ways to reach out to us and the best ways to connect. I know I feel like everyone gets very surprised that Chris's email address and direct line is as available as it is, but that is Chris, and that is you, Rick, too. I mean, you guys are
actually, no, I think Kate puts our best foot forward. So
well, so we've got the website, and we'll ensure that on this video that an email and website address is easily found for all of our viewers. But what's the best way for folks to get in touch with us at this point in time, after they get that letter from another group and they want to see how we look and feel in comparison? What should folks do?
Yeah, we should post I would just tell you, post my cell phone number, which I'm happy to give out right now. My email address is credding@usph.com. You can call me on my cell. You can call Kate. You can contact any of us, and you shouldn't feel bad about that. Even if you're not sure you're ready, we take inbound calls all the time. It's what I enjoy. So call me, 713-828-6514.
wow,
And, send me a note on the weekend. I don't care. Text me. I'll send you a note back. So happy to discuss.
Absolutely. And I think it's been said multiple times, but during the process with us, we truly become a very friendly partner. I mean, we know our partners, and during this process, it's so important that we have a mutual respect and enjoyment to an extent of each other, because this is a long-term partnership. I mean, it's the forever partnership that we hope for these folks. And so, they will have plenty of time to get to know us. They'll have plenty of time to ask questions that they're interested in knowing the responses to, and they can be most assured that we will be providing transparent responses to their inquiries and what they want to know about us. So we love these types of conversations and getting to know folks in a little bit more of a in a potential partnership scenario way. So, all right. So thank you everyone for joining us today. We'll make sure to include Rick's cell phone in the call show notes. Just teasing Rick, but thank you everyone for.
Have at it. That's fine.
Chris, Rick, thank you. And until next time, hope everybody takes care and stays very, very safe and healthy.
Thanks. Thanks,
All right,
Kate.
thanks.
See you
Bye,
guys.
everyone.
Bye.